Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of www.oneoption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. If you're watching the videos on YouTube, the introduction is a three-part series. They describe my systematic approach to option trading. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products or to sign up for the free trial, please visit my research site. That web address spells the word 1 out. Both sites are linked, and www.oneoption.com will ultimately get you where you want to go. I also want to mention that on YouTube, the Chart of the Week is divided into 2 parts. Make sure to watch the second part since it has the highlighted stock. 75% of all stocks follow the market, so that's where I start my analysis. Let's take a look at the market action. This is a chart of the SPY, the S&P 500 Depository Receipts. It's a one-year chart, and here we can see the pullback last August and the rally to a new all-time high. As we all know, the market's pulled back very sharply, and it corrected about 20% from this high back in October. You can't see it here because I used closing prices, but we did have a capitulation low here, and then we tested that low again, and we formed a double bottom. Since doing so, the market's actually had some pretty constructive price behavior. We can see that it's rallied up, and there have been a number of times when it's bounced up to this 139 level and pulled back. You can see it consistently going up there and failing. However, this last time it's actually made the best move up towards it. And each time we're making a series of higher lows here. So the market is actually gaining some momentum. Let's see if we can pick that up on the 1-month chart as well. Here we can see the market's still volatile. Topped out here at 137 before pulling back. Now we're actually up on that 138 level, 139 almost. During the last week, you can see that we poked up above 139, pulled back for a few days, and then today we had a very nice rally throughout the course of the day. We briefly got above that level before pulling back, so this resistance level is formidable. I'll also mention that there are a few other factors to consider. Right now, we're in the second week of earnings season. Last week, we had most of the financial stocks, a lot of the banks announcing earnings, and the financial sector is actually starting to look pretty decent. The stocks were oversold. Worst case scenarios were factored in. When they reported weak results, those results still were better than a lot of the expectations, and the financial stocks have rallied. We're also starting to see some signs of life from the tech sector. The one thing that's plaguing the market is very high commodity costs and very high oil prices and gasoline prices. That's certainly going to be biting into discretionary spending. I also don't believe that the banks are out of the woods yet, so I'm looking at the SPY 145 level, and I'll go back to the one-year chart, as providing considerable resistance right in here. That also is a 200-day moving average. That also is a 5-year uptrend line that was broken. That also is a horizontal resistance level that dates back to last year. So I do feel that the market has a chance to poke through intermediate term resistance at this level, but as we rally up to that 145 level, I think the headwinds will start blowing harder and harder. So the idea at this juncture is get long on a breakout, but trade smaller size. I do have a bullish bias, and this week we'll be taking a look at one of my searches called BDCC Gap Up -2. I love to trade gaps. Gaps to me represent disequilibrium. It tells me that prices are out of whack, and when prices are out of whack, there's opportunity to be found. Those letters stand for bullish, day, continuation, confirmed. and the stock has gapped up 2 days ago. It's trading above the close that day, and the 50-day moving average has been trending higher. Let's take a look at what the search yield. At the top of the column you can see BDCC gap up -2. All of my searches are organized in my scanner so that I know what I'm looking at when I view each column. My approach is to flip through each one of these symbols and to click on them and bring up charts so that I can use my pattern recognition skills for the next part of the filtering process. I'm going to start with ARB, which is actually the second stock on the list. Again, the symbol is ARB because it's more representative of what I'm looking for. When I look for a bullish reversal, first of all, I always want to make sure that the wind is at my back and that I have the long-term uptrend working in my favor. Here we can see that the stock ran up, it pulled back, and now it's starting to resume that long-term uptrend, and it will be challenging resistance at this $30 level. But the long-term uptrend is still intact. The reversal that I play would not be picking tops and trying to pick a stock that's going to fall like this and reverse. I'll tell you from my experience, picking tops and picking bottoms is not a great way to make a living. Always have the trend going with you. So my definition of a reversal is the stock has pulled back, the long-term trends are still intact, and then the stock is starting to get back on track. Let's finish the analysis on ARB. Overall, this looks pretty good. We can see the stock rallied with the market, made a high in November, pulled back with the overall market, established a low, and even when the market retested that low here, the stock did not, and it continued to grind higher. We'll see what we can find in the 1 month chart. We see very nice constructive price movement higher. On a 1 week chart, we see that the stock was flatlining early in the week, and then we got a nice gap up, and then we got the really big gap up here. So this search actually would have come up on yesterday's searches as well, and it would have provided a nice entry point here. Today, when the stock opened higher than yesterday's close, it confirmed the gap as far as this particular search is concerned. So we could have gotten in earlier here, but it certainly looks like the stock is starting to move higher at this point. This is a 1-year chart of the first stock that was on the list, and I skipped to the second stock for this reason. Remember, we want to be on the side of the long-term trend. Here we can see a stock that's pulled back, had a steady decline. It has formed a base, and the stock is starting to move back up, and the 50-day moving average is starting to move up because it has put in this basing pattern. So that's why the search is picking it up. But this wouldn't be my first choice. Again, I'm not looking for stocks that are reversing off of a low. I want to see a stock that's been in a nice long-term uptrend, has pulled back, and now it's resuming that uptrend. So we will be taking a pass on this one.